Home prices in North Idaho are still climbing steadily, but inventory has finally reached a point that we haven't seen in years: balance. So whether you're buying or trying to time the market, or if you're a seller wondering if you missed the peak, the dynamics have changed, and this update is going to be for you. Hi, I'm Ben Geanetta. I'm a realtor right here in Sandpoint, Idaho, and in this video, we're going to go over the full breakdown of what's happening in the Bonner County real estate market as of April of 2025. This is going to include the average home prices for single-family homes. We're talking about days on market, inventory levels, and what's influencing buyer and sellers' behavior, how mortgage rates, how they're shaping the affordability, and a breakdown of specific market segments all across Bonner County. If you like access to an up-to-date market stat spreadsheet, there's going to be a link in the description down below. You can download it, you can save it, and you can go back to it anytime. Let's start with segment 1, and that's going to be the overall market direction for Bonner County. And let's start with the big picture here. In April, we saw 434 active listings right in Bonner County, and that's a major increase from the winter. And it's a sign that more homeowners are confident enough to go ahead and list. At this same time in 2024, we saw 229 single-family homes sold, which was up 28% from April of 2024. That's a huge jump. So what's driving this surge? Well, it's seasonal patterns, of course. Springtime always brings more inventory because people take their houses off during the wintertime. And when there's more listings, that's going to bring more movement to the market. And of course, we still have out-of-state buyers that are coming from higher priced markets where they're still paying for cash, or they have the down payment to afford the higher prices in our market in Bonner County. And despite high mortgage rates, buyers, they're still moving forward when they find the right house and the right fit for them. Gone are the days where they're just going to take it and be okay with it. Generally, we're seeing buyers, they really like the house or they love it. Those are the type of houses that buyers are moving forward with. So what does that mean? It means that we're out of a seller's market. We were in an insane seller's market, as you know, in the COVID days. But for the last 3 years, really, if you go back to June of 2022, that's when we saw this shift, and it's still happening. It went from an extreme seller's market to a neutral market to now the last 3 years, it's been a buyer's market. Not an extreme buyer market, but still a buyer's market. So as of April of 2025, where are we as far as this buyer-seller neutral market? Well, we just hit 6.6 months of inventory in April of 2025, and that indicates that we are just barely into a buyer's market. So for reference, anything under 3 months is going to be considered a seller's market. Anything between 3 to 6 months is going to be a balanced market. And anything over 6 months, you guessed it, is a buyer's market. So again, the last 3 years, we have seen throughout the course of the years, or in the course of the seasons, a buyer's market, or a balanced market. Again, it's seasonal. During spring to summer, it's going into a little bit of a buyer's market. And then when we hit the off months, fall and winter, we fall off of that 6-month threshold and we go into a neutral market. So what does that all mean? It just means that sellers, they have to work a little bit harder to sell their house. No longer can you just throw up a sign in the yard, do nothing to your house, have your agent not market it right. You're gonna actually have to work a little bit and probably negotiate with that buyer to get it sold if you're motivated enough to wanna sell. And for buyers, it's the exact opposite. It means that there is room to negotiate. There are options out there, and you don't have to give up the farm to get a house that you're just not quite in love with. All right, let's go to segment 2 and let's talk about pricing trends. And again, we're gonna be focusing on single family homes, so this is not gonna be including condos and townhomes. And now let's break down the pricing. The median sell price for a single family home in April was $765,000, and that's up just over 3% year over year. And that is a really healthy and responsible growth, a good increase. Again, back in COVID, we were seeing 20, 30, 40, 50% increase year over year. And sometimes it wasn't even a year, it was just a few months and somebody would put it right back on the market and make a ton of money. So it's good to see that we finally have some responsible growth in that 3 to 4% range. Now, In this time frame that we're talking about, the price per square foot, it went up just like prices did. We're at about $388 a square foot, especially in areas that are really sought after like Sandpoint, Sagal, and really anything along the water. Now just keep this in mind, just because price and the price per square foot has gone up, it doesn't necessarily mean that buyers are overpaying anymore. The last 3 years, you're gonna hear me constantly refer to the last 3 years because it's been pretty much the same market for the past 3 years. In those last 3 years, 2022 to today, 2025, the average sale price to list price was about 96%. That means if I'm asking for $1 million, take 4% off, and that's on average of what a seller is accepting. Now, if you compare that to COVID, you were getting 99% of the asking price, and most of the time it was actually 100%. And if you looked at individual months, there were some months where it was about 102, maybe 103%. So times have certainly changed. We're back into more of a healthy market of I'm asking for this and I'm willing to concede a little bit. So what does all that mean? It means that prices, they may be going up, but negotiation, it is back. Moving on to number 3, we're gonna talk about inventory and days on market. As I mentioned, April brought a surge of listings. There was 434 active listings in Bonner County, 33 brand new listings added to April just alone. So when you have more listings, that's going to mean more choices for the buyers, but that also means more competition for the sellers, which they don't like. The average days on market was 59, and that was slightly up from 48 from a year ago. Now that's still under 2 months, but here's the key. Don't expect to get 5 offers on the first weekend. Pricing, presentation, marketing, it matters. So when you are talking to your real estate agent as a homeowner, what plan do they have? How are they going to piece this all together? What are they going to do that's going to separate you from everybody else? And buyers, who you hire matters. If you just go with some random person off the internet, they may not know this area. They might be from Coeur d'Alene or Spokane. I see it all the time, and they don't know anything up here. They don't know the vendors, they don't know the handyman, they don't know who to hire to help you. So because we're in a more competitive market for sellers, and picking somebody that's local, that knows the market, that knows the vendors up here, and has the systems, processes, and everything, it really matters in a market like this. Moving on to segment 4, and let's talk about mortgage rates and affordability. And first, let's talk about rates, because rates have been driving this market for the last 3 years. If the rates are up, the market is slow. If the rates are down, the market is moving. So let's focus on that. In April, mortgage rates hovered between 6.8% and 7% for a 30-year fixed loan. And that's high, and it's squeezing affordability. And it's been really tough, the affordability part for the locals. And here's what I mean. The median household income in Bonner County is just under $62,000 for the entire year. And today's rates, that supports, the rates I just talked about, that supports about a purchase price of $300,000. And we all know, if you're looking in this market, finding a house for $300,000 that you can just move into, maybe change out the paint, does not exist. So what do we think is gonna happen with mortgage rates going forward? Well, they're going to come down. They're not going to stay high. When that exactly is going to happen, I don't know. But here's what I do know, and I'm not an economist, I'm not a lender. We're getting out of my lane a little bit, but I know a little bit to share with you. So when the election happened, things got better in real estate in Sandpoint, Idaho. People felt more confident, buyers and sellers, and we saw all this activity. But then the talk of the tariffs, and that certainly slowed things down because that brought uncertainty back to the market. What's gonna happen? I don't know. I'm not gonna spend money right now unless I absolutely have to. So why has the tariffs affected our market, the housing market? Because international money, they took their investments out of the US bonds and pulled it. With uncertainty of what's going on with the tariffs, they wanted to secure their money. Well, if you've been following the news, China, which is the big one, and some other countries have agreed to negotiate on the tariffs. So we should start to see those international monies come back into the US market and buy bonds, which directly does affect mortgage rates. And yes, I know there's a lot more to this. We can really get into the deep weeds of this, but that's not the purpose of this video. So once we start seeing those bonds being bought up with that international money, That is one factor that's going to help with mortgage rates. Another one is control of inflation, which if you look at the numbers, they are very much improving. So we're headed in the right direction, but when we start to see that fall of interest rates and stay lower, I'm not sure. What I think is going to happen, we are going to end up in that mid-6 to low-6 range, possibly in the high 5s. If we get to high 5s, that's going to be great for affordability, and we are going to see a bunch of activity. Now let's cover the 12-month rolling average for Bonner County in some different categories that really shapes the picture of what's going on in the housing market. As far as the average sale price, again, we talked about this, $765,000, and you can see the prices, they are going up. They're going up at a reasonable price, and that's really good for the market. Now, before we continue, again, I just want to say I use a rolling 12-month average because in this type of a stat, it really shows a better picture than if I just show you a month-over-month average sale price. Because if I show you an average sale price in December, let's just say it was $1 million, but then in January, the average sale price is $800,000, that doesn't mean our market lost $200,000 in 1 month. So when you look at a 12-month average, you're taking 12 months of data and you're putting into one data point. So you're going to see a lot better picture of what's going on with the market. Overall, this is a pretty good graph. It's moving in the right direction, especially if you're a homeowner. So this is a graph of the percent of the list price. So I listed for $1 million and I'm taking how much I'm agreeing to sell it for how much of that list price. You can see as of 3 years ago, we were super high and then it just started over the last 3 years to fall down and it's been fairly steady. Currently, we're at 96.6%, and over the last few months, about 24 months, the sold price percent has been slightly going back up. Generally, we see about 97%, give or take a few tenths of a percent. So we're trending into more of a normal market as far as what the seller accepts from the listing price. Here's a graph that shows the month supply. I do want to point out this is not a rolling 12-month. I actually think this graph shows better, more true to what's going on if you go a month over month. And what you'll notice, again, from 3 years ago, there was less inventory, but slowly and slowly, we're starting to get more inventory. We're setting new highs and new high lows, meaning there's just more inventory on the market. And what's important to point out about this graph, we're not seeing drastic increases. It's fairly steady. It's just 20, 30, 40 more homes than the previous year's high and the previous year's low high. So again, I think this is a really good, healthy indicator of the market in Bonner County. Here's our days on market graph. And again, from 3 years ago, things were moving quicker, there was less inventory, and we've seen an increase of days on market, currently at about 102 days on market. And I expect this numbers to start going back down a little bit as we hit the prime selling season. Here's another graph. This is a rolling 12-month average of the amount of homes that are currently on the market. So once again, you can see this nice gradual increase. We haven't seen a skyscraper increase of houses. And so that's a really good indicator that our prices are going to stay strong. And finally, we have sold, the amount of sold listings over the last 3 years. And again, you can see that we started out selling a bunch of houses, it started to slow down, it started to stabilize, and now we're starting to see an uptick in sold inventory, which is good. We want to see more houses sold because the last 3 years, I'll be honest with you, it's been a struggle. Now we're going to be talking about just single family homes still, but 3 bedrooms, 2 baths. That's the only filter that we're using. We're talking about waterfront, we're talking about in-town, rural, just as long as it has 3 bedrooms, 2 baths, and it's a single family, it's going to show up here. And let's start with the average sale price. So right now we're at $616,000. That's of April of 2025. And you can see on this graph, it was lower. It was actually at about $565, maybe $570 3 years ago. And now we're at $616. So overall, not bad growth. It's not crazy, scary, oh my goodness, prices are going crazy high and everything. As far as the sell price to sell ratio, or the listing to sell ratio, again, we started out really high, we came down to earth, we stabilized, and we started climbing up again. So overall, I think this is a good sign. We are currently sitting at 97.6%, which is again about where we are in a healthy market, in that 97, maybe a little bit higher than that range. So I think the 3-bedroom, 2-bath micro market is actually doing pretty good up here in Bonner County. Days on market for a 3-bedroom, 2-bath in Sandpoint, we're just under 100 days at 95. And again, we have creeped up. We had some ups and downs, but we're really staying around that 90-day mark. Here's a big one. We're talking about month supply, and we're at 5.5 months of supply. And if you remember, we're below 6 months. So that means we're in a balanced market, because we're above 3, we're below 6. We are in a balanced market for a 3-bedroom, 2-bath home in the Sandpoint area. As far as how many houses that are for sale that are 3-bedroom, 2-baths in Bonner County, again, we're increasing. We increased, we leveled out there for about 18 months, and we're starting to get more inventory. Again, I think this is good, responsible growth. As far as closed sales go, we saw a big drastic change. We've talked about that. We leveled out, but now we're starting to see a little bit of a pickup. So hopefully that continues and more people can buy a home up here in Bonner County. Let's move on to the condo segment of Bonner County. And the first thing we're going to talk about is, you guessed it, the average sale price, which is $859,000. Which is quite a bit of an increase. This is one of the graphs where 3 years ago, you can see it was a lot lower, and the prices just kept climbing pretty aggressively. And even with those high prices, you can see the list to sell ratio, it was coming down. So even though prices went up a lot, they were accepting less and still those homeowners were still making a pretty good profit. You can probably thank Schweitzer and the Seasons for this increase. As far as days on market goes, we saw this segment increase to 133 days. It was a lot, not a lot, but it was definitely lower 3 years ago than we are today. Month supply, we are seeing a nice downward tick. We're at about 12 months, which is an insane buyer's market. So if you're trying to sell a condo, right, this is all really interesting info. So we had a nice surge of price of condos. Sellers are taking less, and now inventory is coming down. So it's really going to be interesting to see what happens to condos. If you're trying to sell a condo right now, this is probably not the best time. If you're looking to buy, this might be a good time, because there's a lot of options right now, and sellers are starting to take less. And here's a graph that's showing the amount of inventory, condos for sale, over the last 3 years. And unlike some other segments, it's going up. It flattened out a little bit, but there's still a lot of condos going up for sale. And here's an interesting graph about how many condos are selling. So they were coming down. We had a little bit of a uptick in that they were selling more, only to kind of bottom out, and it is recovering a little bit. So the condo market right now in the Sandpoint area is pretty interesting. Let's talk about our waterfront properties and the average price that they're selling for right now. Currently, we're just over $1.7 million. And you can see off this graph that over the last 3 years, we've seen a nice price reduction, or average sale price, come down. And selling some waterfront over the last 3 years, I would say this is true. We have had a hard time with waterfront over the last 3 years, because again, the people that are in this price range, they don't have to buy, they don't have to sell. So they're being a little bit more stingent on the buying side and what they're willing to sell it for. And I just love this graph. It is the percent of the list price. And there is a couple months, you can see in this graph, where the sellers were accepting 93% of their asking price. So this segment of the market really took a hit. Now, it didn't stay down there low. It started to rebound, and currently it's at 94.9%, which is a little bit less than what we see for the overall Bonner County market. Now, as far as days on market goes, you can see that it has been relatively stable. It dropped off like most everything else, but it's been really stable, I would say, over the last 24 months. And currently we're sitting at 103 days on the market, which is not terrible for waterfront. As far as month supply goes, we're at 7.8%. So we're definitely in a buyer's market for waterfront. Waterfront, like I said, it's just not moving. There's a ton of options out there. Then you look at how many waterfront homes have been on the market in the last 3 years, and you're seeing a slight gradual increase. And I'm sure when we look at the next graph, you're gonna see not a whole lot is selling, which is right here. And this graph is kind of crazy. But yeah, you can see there's not a lot of waterfront that's selling opposed to how much was actually on the market. I think that's a big reason why we're seeing this segment take a little bit of a beating, the biggest beating that we've seen so far. We're on our 10th segment right now, and I want to break this down, the segments, into a price point. So let's look at $350,000 to $599,999. In this graph, we're looking at the list price to sell price, and we're looking pretty good. Currently, we're sitting at 97.5%, which when you look at Bonner County, that is about where we're sitting as a county. And when you look at just a healthy market, that's about where a healthy market should be. So overall, I think this is a great indication that for that lower price starter home, we won't get into it, but yes, that's the range of a starter home, first-time home buyer in Bonner County. $350,000 to $600,000, you're sitting at about 97.5%, which is not that bad. You see it's coming up a little bit more and stabilizing. As far as days on market, we're looking at 90 days, which is not that bad. Here's another great graph. We're looking at 4.5 months of inventory. We're definitely not in a seller's market, and we're definitely not in a buyer's market. We're in a good neutral market here at 4.5 months. So when I look at these three graphs, I see sellers are getting about what they are asking for in a reasonable market. They're accepting a reasonable number. They're moving relatively at a good pace, and you have a healthy amount of inventory on the market. Now let's move on to $600,000 to $849,999. Once again, we're at 97.5% for the list to sell ratio. You can see that it came down. It was higher, it came down, and it leveled off, and now it's starting to pick up a little bit. I think this is a great list to sell ratio. As far as day on market, 3 years ago, they were moving quicker, it came up, and now it's starting to stabilize in the 103-day range, which is a little bit longer than our last segment, but that's okay. It's not too bad. I would like to see a little bit lower, but basically 100 days to sell in this range, I don't think that's too terrible. And then our month supply. So now we're at 6 months on the dot as of April of 2025, and I think we're gonna go a little bit higher, just like every segment's gonna go a little bit higher as we get into the warmer months. So we are barely into a buyer's market, and we'll continue to go into a buyer's market, but it won't be so drastic where the sellers are going to have to cut their prices by $50,000, $100,000, $200,000 to get their houses sold. Now when we move to $850,000 to $999,000, $999,000, I think I had the right amount of nines in there. We're still looking good as far as the list to sell ratio at 97.8%, and we can just move on because you guys have heard me say this a million times about this segment. Days on market, we're at 95. Again, we were stabilized, we came down, and now we're starting to recover. Well, not really recover, but go back on days on market. But again, I don't think this is bad. This is what I don't like about this segment, is the amount of inventory that's on the market. We're currently at 7.9%, which is just gonna go up more. So this is an indication that this market is a little saturated, or maybe not saturated, but it's just moving slower. And this is maybe the pivoting point of, man, if I'm a seller and I'm in this price range, it may not look great for me, but as a buyer, there might be more opportunity to negotiate in this price range. This is where things start to get interesting. The million to 1.499999 million, where the percent of list to sell is not the best. It's at 94.6%, which is not horrible, but it's not great by any means. You can see that it's been falling. It really hasn't recovered. It's been stabilized, but it hasn't really improved from that 94% range. We look at days on market, it's trending in the wrong direction. It's going up and to the right. That's where we want our prices, up to the right, not days on market. So currently we're at 123 days, which again, it's not horrible, but it's not trending in the right direction. And now we look at our trusty months of supply graph, and this isn't all that great either, because we're sitting at 9.4 months of supply. That's a lot of supply. That is like an extreme buyer's market. So if I'm a seller and I'm in this price range, have some patience. Make sure you get a great agent who's going to do more than just put a sign in the yard. They're going to have a game plan, a marketing plan, and they're going to do more than just throw a sign up. They're going to invest into spending money to market to more people than just what, oh, I stumbled across your listing on Zillow. Moving on to 1.5 million to 1.999999 million, it's not looking any better. Our list to sell ratio is now at 93.4%. And there really is not a sign of it improving. This is just not a good indication in this price range. We look at days on market, and I don't like that on the right side of the graph, just going right up to 137 days. It was fairly consistent, moving up just a little bit, but man, it has shot up to 137 days. So right now, with the first two graphs, this is not looking good for this segment. And then you look at the month supply, and currently we're at 10.7 months of supply, which again is not good, but it is an improvement. This is the only graph that's improving in this segment where we're starting to see it come down. It's not coming down quick enough, which actually might be a good thing. A nice slow recovery is going to be better than something drastic. So this is a little bit interesting. When you look at the 2 million to 2.49999 range, this segment, they're netting 95.9%, so they're basically at 96% of list to or sold to list ratio, which is not horrible, it's not great, but definitely better than those other two segments. Days on market, about 148 days. It was higher, it came down, it crept up, and it looks like it's stabilizing again. So it's actually interesting. Once you get above 2 million, it's like that $1 million, $1 to $2 million is not a good section to be in, but once you get above 2 million, it's a little bit better. It's not great, but it's a little bit better. And this graph further supports that because we're at 6.7 months of supply. It's going to go up a little bit more, but it's nothing like that $1 million range. So it's actually very interesting to be in the $2 million range. It's a lot better than being in the $1 million range. So when we wrap all this up, we put a bow on it, what does it tell us? Well, you have more homes to choose from, and depending on what section, what segment of the market that you're in, it's going to be really good for you as a buyer or really good for you as a seller. Just that's why I broke it down like this, because it's more than just the market. What market, what micro market are you in? But regardless of what micro market that you're in, make sure you hire a great realtor that's local, that's knowledgeable, that has the systems and the processes in place to support you on buying and selling. I would love to hear your thoughts about what you think is going to go on with the market. Go ahead and leave it down below. And if you're serious about buying or selling in Sandpoint, make sure you interview me. You're going to be glad that you did.